Okay, something is going on. This is not going live. Give me a second.
Cecile, do we call ourselves the Arkansas Consumer Task Force, or do we call ourselves the Arkansas Consumer Law Task Force?
Oh, I like the Arkansas Consumer Law Task Force.
Okay.
We are live now.
I'm going to wait one more minute and see if anyone else signs on. Hello, and welcome to Facebook Live, brought to you by the Arkansas Consumer Law Task Force. My name is Jennifer Gardner, and I am the director of the Tax Clinic at Legal Aid of Arkansas. We represent low-income taxpayers in their controversies with the IRS, and we also educate taxpayers in their tax rights and responsibilities. Today, I have three experts on borrowing with me: Rich Verschel from River Process Development Services, Natalie Ram from Legal Aid of Arkansas, Cecile Doan from the Center for Arkansas Legal Services. Each of them will introduce themselves separately. Together, we are going to brief you on 4 borrowing topics. We want this Facebook Live to be very interactive. At any time, if you have a question or a thought or an observation, please type your thoughts in the comment box, and we will monitor these questions for our panelists to answer. And now, first on our presentation list is Rich Verschel. Take it away, Rich.
Thank you, Jennifer. So I'm going to be talking about what you should do before you go to a lender and things you can be doing. So let's go to the next slide. And so what I want you all to do, realize that I need money, you need money, everybody needs money. Okay. And so everybody wants more money, but you have to ask yourself, how much of this is a need and how much of this is a want? And so before you go, you really have to say, what do I need this money for? Do I really need it? How much do I need? And what we're trying to do is be a little bit more preventative in addressing this cycle of debt. So Jennifer, thank you. So here's the cycle of debt. Some of you who are watching this Facebook Live, you have credit card debt, you have maybe student loan debt, but usually what starts the cycle is that you don't have money. And so you go out and you say, I'm going to borrow money. Then you borrow the money because you don't have enough money. So you find out you can't pay money. You can't pay back the money. So you start borrowing more money. And the more money you borrow, the less money you have to spend on yourself because you have to pay for the loans that you've taken. And it keeps on going around and around and around, and you start never digging out. And so I want to take the opportunity for everybody to understand that you have to break that debt cycle, because sometimes it's just easy for us to justify adding that new debt. And we're going to talk a little bit about the difference between what I need and what I want. A new car is not a need. You need to go to work, you can buy a used car, you can go and carpool, or if you have some public transportation. The need is getting to work, not you want a new car, you want a late model car. And that's something you've got to go through to understand what do you really need. As you justify adding the new debt, you start taking on new debt. I realize that when you owe money, you start feeling stressed because if you can't pay your regular bills, now you can't pay the bills for the loan, you're going to get a lot of stress. That stress, then you say, what am I going to do? So to relieve that stress, you take out more money. And we want to break that debt cycle. So let's go to the next slide. Also, you have to realize that who you choose to borrow money for is very important. The first thing you have to understand is that people lending you money, this is a business for them. They talk about buyer beware or borrower beware. If in fact you are a consumer and you don't have a lot of knowledge, or if you have a low credit score, or you're a risky borrower, the people who are going to lend you money know you have very few alternatives, and so they're going to charge you more money, whether through a origination fee or going through interest rates, which we'll talk about in a few minutes what those are, and they're going to take advantage of you. It's unfortunate, and so you all as a borrower need to be very much aware of this. Short-term financing through payday loans and auto title loans are not in your best interests. Most people who have really good credit do not take out those loans. Those payday loan people, the auto title loans are there to take advantage of you, to make more money off of you than you really should be paying. And it's a reality that there are unfair and deceptive practices to sell you a product that isn't in your best interest. And that goes for loans. Next slide, please. A little bit about, for those who don't know what a credit score rating is, there's a company called FICO, and this is what the range of scores are. And the higher your FICO credit score means that you have a good credit history and you get preferred status and you pay a lower interest rate. If you're down around a 600, you're going to be paying more because you're a riskier person. So, for example, if you were to go into a car dealership and take out a loan, you would start going through different lenders before they would match your 600 credit score. And every lender that looks at you, if you're not in a very good category, it bumps down to lenders who focus on the good category, and they charge you more interest rate. And then if you don't qualify in the good credit score, you go down the fair, and another company comes in and they'll offer you even higher interest rates. So there's a need for you all to be aware of this, because the secret to getting better interest rates is to have become a more credible borrower and be able to have a higher credit score. So we talked about the debt cycle, and I want everybody to understand who's watching this Facebook Live that the first thing is the debt cycle is you don't have money. And so Legal Aid of Arkansas offers an outreach program and some basic money management skills. One of them is to learn how to save money and live below your means. So we want you to live on only 80% of your take-home pay and pay yourself 20% into savings first before you start paying your expenses. We also help you develop spending plans and prioritizing and executing those spending plans. When we talk about a spending plan, that's sort of like a budget. You have housing, you have electricity, you have utilities. And when you prioritize them, you break them into needs and wants. Needs would be something like, I have to pay my electricity bill. Netflix is not a need. That is a want. So by prioritizing to get into that 80% spending of your take-home pay, you're able to live in you could be able to live in your means. If in fact now you need more money, you have to borrow money. You should not be borrowing money unless you have to. Realize that if you were to take out a $2,000 loan, you are going to have to probably pay about $100 a month. Now realize that I would like you to spend that $100 a month on yourselves and save that money and pay your bills, as opposed to adding additional loans to that or additional monies to that. You don't have $100 a month available right now and you take out money, you're going to have to pay back $100 a month. And it's something you should be aware of. If you can afford a $100 a month loan payment, you should be putting that into savings. If in fact you go out there and you borrow money, you may find yourself that you can't pay that back. and through credit card debt, through loans, through student loans. We understand we're all human beings. Sometimes we get ourselves into trouble. Realize there is help out for you, and you have to ask for it. So why don't we go to the next slide? So if you have a chance to write this down, this telephone number, there is a Credit Counseling of Arkansas, which is 479-521-8877. This company will help you. It's a more or less a free service to be able to help you get out of debt, to help train you and understand you. It's very important to know that you're not alone out there. These people are here to help. The other thing is that, and we're going to talk a little bit later on about credit reports, you should be looking at your credit report. You can get it from creditkarma.com or annualcreditreport.com. It's free, and you should take a look what's on it, because there may be some information that is incorrect. Go to the next slide. And so my last slide is talking a little about the vocabulary of loans. So credit, people use that word around a lot, and the definition of it is the ability to borrow money in return for a promise of future repayment. So credit isn't free. You're going to have to repay that loan or repay that money. We also talk about credit bureaus. Realize that the credit bureau that's there, that's reporting on your credit history and your credit, it's a business. They are charging the companies that want to check out your credit money so they can find out about you. So this is a money-making business for those credit bureaus. The credit rating, and there's a number of different ways of measuring your credit ratings. One of them, as I showed earlier, is what's FICO, which is typically the one that's used. And those ratings are used for what we'll call a secured loan or an unsecured loan. And a secured loan is something that's backed by something of value, pledged to ensure the payment. And in order that what that's called, that is being pledged, it's called collateral. So you have it with a house as a secured loan, with a car as a secured loan, because that collateral is your house or your home, as opposed to a personal loan, which is an unsecured loan. And you get that money based on your credit history. As I said a little earlier, you should be working on trying to improve your credit scores and becoming a more credible borrower. So this way you can get lower interest rates and to be able to get some emergency monies when you in fact need it. We talked a little bit about the credit. The definition of credit is the ability to borrow money in return for a promise of future repayment. With that, you're going to have to pay finance charges. People aren't going to just lend you money for free. And you're going to have to pay that either as an origination fee or as an interest rate. And that interest rate is called an annual percentage rate, which is calculated on how much money you're taking out. If in fact you have to go and take out a loan, you should be aware of these terms. One thing I should let you know is that, especially if you have a fair score for your credit score, you need to shop around. You can go on the internet, you can go to credit unions in order to do that. If you go to the first person, again, they know you have a low credit score, they're going to take advantage of you.
Rich, I have a question.
Yes.
Do you have a general feeling about where you would get the lowest rates?
I went online this morning for who can provide loans. I put in for a $2,000 loan, and I got for a credit score around 600, anywhere between 10% annual percentage rate and 30% annual percentage rate. So you really have to find out what is going to work best. You can go to, I said, credit unions tend to have a very good reputation for not taking advantage of you. Community banks as well. and some of these online services. But again, the borrower has to be aware. You have to shop around to get the best interest rates possible, as well as the lowest origination fees.
Next. Oh, Rich, thank you. We're turning over to our next presenter, Natalie.
Hi, everyone. I'm Natalie Ram. I'm a fair housing attorney for Legal Aid of Arkansas, and I'm here in the Little Rock office. We're going to talk a little bit about fair housing basics. So if you've done what Rich has been talking about, and that is paying yourself first for a while, you may have built up some savings, you may be looking into buying a home, or you may want to take advantage of the low interest rates right now and refinance a home that you already have. Both of those transactions are covered by the Fair Housing Act. The Fair Housing Act makes it illegal for people to discriminate against you in the home buying process, as well as in the renting of a unit. And people cannot discriminate against you based on 7 protected classes. These are race, religion, color, national origin, sex, familial status, and disability. There's also the Civil Rights Act of 1866, which prohibits discrimination in housing transactions based on race. So there are some, if we can go to the next slide, there are some exemptions to the Fair Housing Act, but it's good to keep in mind that that Civil Rights Act of 1866 always applies. It doesn't have the same exemptions that the Fair Housing Act does. So race is always going to be an impermissible trait to consider in selling a home. So some exemptions to the Fair Housing Act are sales of single family homes unless a broker or agent is involved. Now, this is, most sales of single family homes are going to include an agent or broker. And then it's also good to keep in mind that even if it is a single person selling their home on their own, they still cannot advertise in a discriminatory way. That would be prohibited by the Fair Housing Act. Now, the familial status category for fair housing, it does allow for housing for older persons. So housing that is specifically for older persons can prohibit people with families from living there. That is not something the Fair Housing Act covers. And it's good to keep in mind that Fair Housing Act exemptions are really interpreted very narrowly. If we go to the next slide, we can see what all of the prohibited conduct is. So like I said, refusal to rent or sell is prohibited. Discriminating in the terms, conditions, or privileges in the sale or rental. So that's going to include things like having different interest rates for a person based on, for example, their national origin, or something like refusing to close on a house because the woman in the relationship is pregnant and will not go back to work prior to the first mortgage payment being due. So things like that are examples of prohibited conduct. There's also some larger things that banks are prohibited from doing, like redlining, for example. That's going to be something that would be really difficult for an individual person to see happening. So that's something we really have to, here at the Fair Housing Office, we have to investigate on a more systemic level.
Natalie,
yes.
This is Jennifer. I don't know what blockbusting is.
Okay, I'd be happy to explain. So blockbusting it's a practice that we really don't see happen anymore, but it was a really big practice in the 40s and 50s, and that is that in white neighborhoods, usually brokers would come in and basically instill fear in the residents that Black people would be moving into the neighborhood. And so what they would do is they would encourage those white owners to sell their homes. And they would even go so far sometimes as to send Black women with baby carriages to walk through the neighborhood to really scare those white owners into selling their homes at a discounted price. And then those same brokers would turn around and sell the same homes at a higher price to minority residents. And so they would make a killing on those types of scams. And then I wanted to talk a little bit about credit reports. Rich already spoke about this. It is important, when you're applying for a home loan, typically the lowest credit rating you can have is like a 580, and that's usually for like FHA loans. But for a traditional loan, it's probably going to be more like 620 is the lowest. And if we remember what Rich's slide said about, fair credit ratings, that was 580 to 629, I think, or something. I can't remember. Anyway, something like that. And so you can actually buy a home with just a fair credit score. So that is a good thing to keep in mind, because people a lot of times think homes are a purchase that is too much for them if they're on disability, for example, or something like that. But there are loans out there that that really can cater to people with lower incomes. So that's important to keep in mind. Right now through April, so you can always go to freecreditreport.com to get a copy of your credit report. And then also through April 20th, 2022, everyone can get a free credit report, one per week, from any of the 3 big national credit reporting agencies. And all you have to do that is go to annualcreditreport.com.
Natalie,
and then finally,
do you have any
yes.
experience calling to get a credit report?
No, I do not. I've always done that online. And also, I have a Capital One credit card, and they have basically a link on it where you can just go check your credit report. I think it's through CreditWise. So it's possible that if you have a credit card, there may be something in your credit app on your phone that you can just automatically check your credit score.
And it's my understanding that normally the reason this is called annual credit report is normally you can only get one per year from each of them. And it's been multiplied by 52.
Yes.
So, okay.
Yeah, so it's really something to take advantage of right now, especially if you are doing things to try to build your credit in order to make a big purchase like a home, or even a car. But I would say that, like Rich said, probably a good idea to go for used cars instead of new ones. But yeah, for a home, it is important to keep track of your credit score. Make sure you're in that fair to good credit score range when you do apply for a loan, so that you'll be eligible for it. And then something to keep in mind is that if there are errors on your credit report, that's one reason you should check it. You can go to the Federal Trade Commission website and you can dispute any errors on your credit report. I've never personally done that. So I don't know exactly how that would go, but I know that that is a process that you can do through the Federal Trade Commission website.
Well, now that you can get a credit report once per week, you could dispute and then just keep checking on it. That's pretty handy.
Yep.
Yeah, one thing about disputing credit, there are companies out there that you can pay to dispute credit. And some of them, what they do is they send a letter to the agency every month, but they never resolve the dispute. All they do is keep on sending a letter, which gets removed from your credit report. The minute you stop paying that person to resolve the dispute, the letters stop and the dispute will show back up on your credit report. And so if you need help with that, credit counseling of Arkansas can help you navigate to get the disputed charges off your credit report permanently. And because they do it more frequently than you would.
Oh, we are jumping to, thank you very much, Natalie. That was great. And we're going to now talk to Cecile regarding auto loans.
Hello, everybody at Facebook world. This is Cecile Dawn. I am a managing attorney at the Center for Arkansas Legal Services, and I am so thrilled to be here talking to you today about auto loans, because the season of giving to others and the season of giving to ourselves is almost upon us. And the dealerships are trying to get rid of the old models and bring in the new models. So the ideal process is that you have gone and discussed with your family and investigated what is the best car for your family and what you can afford with your monthly budget. Then you go and you find the actual market value of your own vehicle in an ideal world using either Kelley Blue Book Online or the National Automobile Dealers Association. Investigate that so you have an idea of what you can trade your vehicle in for. And then you go to the dealerships and you take a look at the cars to see which car you want. You go into the vehicles, you test drive it, you make sure it's running really well, or at least very, very well. But this is a car that you're going to keep for several years. So you're really going to want to ensure that this is a good car for you. Now you go, you sit down with the dealer, the seller, and you work out an agreement concerning what you will pay and other things. Then they give you a retail installment contract, which could either be in an electronic format or actual paper copy. So this is a picture of a sample retail installment contract, and it's actually a real sample. So it's obviously redacted, but what you'll see on it is the buyer's information, and there's a requirement that the seller is on there as well. The year, make, model, and VIN number for the vehicle needs to be on there. If you have a trade-in, all that information needs to be on there as well. And we'll discuss more closely about the itemization of charges in a second, but at the very end of this will be where you signed. Again, it could be electronically or it could be a physical copy of your signature at the very bottom. And as you can see, it's a very lengthy contract. And this is just what you see here is just the front of the contract. And the back, there'll be more terms, but this is just a front, and it's so long I couldn't even put it onto one slide and still let y'all take a look at it. So moving on to the next slide. The Truth in Lending Act is a law which requires disclosures to be made to consumers so that they can make an informed decision regarding purchasing vehicles. In this big rectangle at the top, you'll see the annual percentage rate, the finance charge, the payment schedule, total sale price. All of those things are required to be on a contract. Do not sign a contract if you do not see those things on there, because the Truth in Lending Act requires it. There is an itemization underneath that, and with this itemization, now typically you're going to see this on the contract, but it's not required by the Truth in Lending Act to be on the face of the contract. So at the very least, if you don't see it, demand a copy, because you are allowed to see this. In this itemization is where they're going to list out every little thing. If you purchased an add-on agreement, for instance, here there was an express auto gap, which is it's essentially if you were in an automobile accident and you still owed money on the vehicle on top of its actual market value, that they would pay that. So you can have that add on there. There may be extended quote warranty. It's a service contract that if a certain thing is wrong with your vehicle and that's a covered part, they will cover that part. I highly discourage you from getting it and adding it onto your contract, because you can get it separately. And if you add it to the contract, you'll see this interest rate and your percentage rate, that's going to be added onto it. So you may not want that huge interest rate to be added onto the service contract. But anyways.
Yeah, Cecile, since you brought up the finance charge, the annual percentage rate, that seems so high.
Yes, because in other states, in the national bank, well, okay, so let's just start at the beginning. Arkansas's constitution only allows 17% per Arkansas constitutional for consumer purchases. However, the National Banking Act does allow them to increase it to wherever their principal place is. So for instance, this contract, the lender's principal place is actually out in Texas. So Texas, if you look, they have even up to, I'm not even joking around, 25%. They have allowable 25% interest rate. And as Rich discussed earlier, no business is going to lend you money without taking their flesh. Okay, they're going to. So in this one, yes, it's 21%. It is allowed. And what that means is if you continue making in that payment schedule, the 72 payments of $711 per month, you're going to end up paying $22,880 in interest over the life of the loan, on top of the actual cost of the vehicle, which was $27,231. Now that, of course, you'll see was reduced by the trade-in value. They had a vehicle which they traded in that got that value, and it reduced the sales price to 25. But let's not forget, they added some other add-ons to this agreement. So it actually ended up that they were borrowing $28,000. They're borrowing $28,000 and they financed it at 21.6, which caused the finance rate or the finance charge to be $22,000. They're paying $51,240 in 72 months, not to exclude the $2,000 they put down. So the total cost of purchasing this vehicle that's only worth $26,000 is $53,000 if you pay the 72 months at 7-Eleven. Now, if you are going to prepay, which would reduce the finance charge, then they have to disclose that as well. They need to disclose that there is either a penalty for it or no penalty for it. And most contracts, they don't have a penalty, but you need to make sure that it's on there, because you need to know if you prepay that you're not paying a penalty for prepaying. Also, if there's a late charge, it needs to be on there. What is a late charge? When is it going to be considered late? When are they going to charge you at what percent or dollar value? Well, both, really. So that has to be on there as well. Yes.
So Cecile, for a car that's listed for $27,000, I'm paying $53,000 and change for that $27,000 car.
Yes.
Is that correct?
Yes. Yes.
Thank you.
Yes. Yes. So just be very, very careful when you're looking at this and you're thinking about it. Okay, well, I'm making $711 monthly payment. I can afford this. But then you really got to think, what are you really paying for this vehicle in the long term? If you can pay it off faster, you won't be paying the 53. But if you can't, that's how much you're paying for it. So moving on to the next slide.
Well, is it possible, going back to what Rich was saying about your credit worthiness, can you go to reputable dealers and negotiate with them about the actual rate, the finance charge?
Yes, Jennifer. Yes, absolutely. If you have like Rich had mentioned, if you have a better credit score, obviously this annual percentage rate is going to be reduced. And most of the clients at the Center for Arkansas Legal Services and Legal Aid of Arkansas, their credit score is generally not as high, not very satisfactory. They're kind of on the lower end of it. So they're the ones who, like Rich had mentioned, are getting preyed upon. And that's why, like, for instance, in this one, a family vehicle, you're ending up paying $53,000. Yes.
Whew.
And yeah, that's why be very careful. The odometer disclosure. Now there's a federal law and there's a state law which requires that when a transfer of a vehicle is made, that they disclose to you the mileage on the vehicle. So in here, it says the seller is stating that the odometer reads this amount to the best of their knowledge is the actual mileage. If they check mark, I hereby certify that to the best of my knowledge, the odometer reflects the amount of mileage in excess of its mechanical limits. What they're saying is it had already turned over. The odometer had already turned over. So in the older vehicles where they have the little turn the dial, then it's reached its maximum dial and it's returned to zero. So that's saying, hey, that's above its actual its turnover rate if they click that button or they mark that square. The second square, if it's marked, is a good indication this vehicle probably has multiple problems with it. And if they say there's an odometer discrepancy, you do not want to purchase this vehicle because there are some problems. There are lots of problems with this. It could be that there are actually two vehicles merged. And there are, there really are places that sell vehicles as one vehicle, but actually they'll tell you, well, it's two. It's two different vehicles. So this vehicle is this odometer reading, this part is this one. We put them both together and gave you junk car. But anyway, so I hope that's helped you. Always look for the odometer disclosure and look for the Truth in Lending Act's requirement on your actual retail installment contract. Thank you.
And now it's back to me. I am the director of the Low Income Taxpayer Clinic at Legal Aid of Arkansas. We've talked about loans and borrowing in a couple of contexts. So now let's move to tax refund loans, also known as refund anticipation loans. We've been saying this for years, just don't do it. Tax refund loans are everywhere, including at appliance stores and car dealers. And here are some of the reasons you should not use these products. So what I have up here is a flyer that we have available at Legal Aid of Arkansas in 3 languages. This obviously is the English one. And if anyone on this seeing this Facebook Live would like to have copies, we can send it to you on paper or electronically to distribute anywhere and everywhere. We're trying to advertise, don't do it. So there are lots of reasons you just shouldn't do it. So here are some of them. First, they're very expensive. We've seen fees at Legal Aid of Arkansas ranging from $350 all the way up to $900 when the preparer advances some of your refund, rather than you just getting your refund directly from the IRS. We want you to wait, if you can, wait to file your tax return. And if you file it with VITA, when VITA is open and Free File is open in late January, it's all free. There are no fees. You're not borrowing any money, and you will get your refund directly from the IRS. And just as quickly, once you filed your return, you can avoid this whole mess, the fees. So the second reason we don't want you to take out a tax refund loan is you completely lose control of your refund. Once the preparer gives you this advance money, say it's $500 or $1,000, and sometimes people do this, they spend maybe $800 to just get $500 in advance, say in November or December. Once you sign up for this advance, the IRS pays the entire refund to the preparer and not to you. Then the preparer gives you only the leftovers after subtracting your loan amount. Sometimes there are no leftovers, and sometimes the preparer just doesn't turn over the funds. And of course, these are the kind of cases we get at Legal Aid. They just keep it. And so you've lost all control once you sign up for a tax refund loan. So another reason, a third reason you shouldn't borrow using your tax refund loan is your refund could be either delayed or reduced through no reason, no fault of your own. And we've seen this a lot in the last 2 years. And that leaves you with just a debt to the preparer. And we don't really know how the preparer is going to respond to this delay. This is not a conventional loan. And so they could use strong arm tactics. They're not governed by anybody. And we don't know how they're going to behave when you tell them, well, the IRS just hasn't processed my tax return. I'm in an examination, for example. We've had clients whose preparers made advances in December, for example. They just make a pretend return based on guessing what the taxpayer's income would be. Then when the return was filed, the refund was completely different. So by getting this advance, you're taking a lot of chances. And once again, if you would like a copy of this beautiful flyer, let us know, because we want to spread the word. So we want you to keep your money. every one of us has said it. We're trying to figure out how you can keep your money and make good borrowing decisions. At this point, we hope that most of you with children have already been receiving the advanced child tax credit, which really is an advance on your refund for 2021. We're hoping that this year possibly could be different from other years, and that the advanced child tax credit will tide you over till the end of the year and let you be able to go out into 2022 and wait to file your return during filing season when VITA, the free tax return preparation sites, open for you at the end of January. As a result, because you haven't taken out these loans, you'll in doing what Rich advocates is you're going to borrow less. So that's my quick pitch for don't take out a tax refund loan. We have many more updates up our sleeves. We're going to save them to our next go round. And that's enough for today's news on borrowing. If you have questions, we're going to pause this for a second. We have Legal Aid's phone number. If you have a specific case you want to talk about, your own case, then you want to apply for services, these are the hours that we take intakes of new cases. We have the phone number for Legal Aid. We have the phone number for Center for Arkansas Legal Services. Please call us. If you just have a quick question regarding this Facebook Live or anything we've talked about here, you can chat us on Facebook attached to this video at any time, and our top-notch communications team will get us the questions, and one of the four of us will answer your questions. Thanks for joining us, and continue to send us questions here at any time, and have a great day.